Good morning. Welcome to the Worcester Business Journal's Webcast Forum on the future of commercial real estate post-pandemic. I'm Grant Welker, news editor of the Worcester Business Journal, and I'm joined by a panel of experts who are going to share their view on current commercial real estate conditions and share some of their insight on key data and early trends, which sectors are strong, where there is weak demand, and where there are opportunities. This special session is brought to you by the support of our friends at Middlesex Savings Bank. Middlesex is one of the largest mutual savings bank in the country and has been serving businesses in our region for 185 years. Our panel that we have today joining us are Roberta Bryan, Vice President of Projects at the Worcester Business Development Corporation, better known to many of you as the WBJ. Philip DeSimone, who recently joined the real estate firm Kelleher and Sadowski as Executive Vice President. Mark Donahue, who is the chair of the real estate group with the law firm Fletcher Tilton. And Bill Manley, who is the CEO and CIO for Clare Properties. And before we jump into the presentations, just a couple of notes for the audience. If you have a question, please type it into the Q&A box and we'll get to as many of your questions as we can. Today's webcast is being recorded, and a link to the recording, along with panelist presentations, will be sent to all of you after the event. All right, let's get started. First up is Bill Manley of Clare Properties. Bill, on to you.
Great, thank you very much, and thanks to everybody at Worcester Business Journal and Middlesex Savings Bank for having me on today, and hopefully if anybody, I'm not going to read right off the slides, but if anybody has any questions at the end, feel free to ask me. I'm happy to answer anything. I guess, today we're talking about which for me, the industrial market and kind of how COVID-19 has affected, the industrial market and where, I think there might potentially be opportunities in the future. And I think that, before we, talk about the future, it's always a good idea to maybe talk about the past. And what's interesting about the, Boston kind of New England industrial market is it's always been kind of considered this pretty sleepy kind of cul-de-sac. And, it's kind of a, it's not Harrisburg, Pennsylvania. It's not, it's not the Meadowlands. It's not, it's not Riverside, California. I mean, this is kind of an area that, doesn't have a major port. Our biggest claim to fame here, has kind of been, our biotech more recently, but our educational hub, et cetera. But it has never been a big market for industrial. And, I've been doing this for about 30 years and really specializing in industrial for the last 20. And, I could tell you that in any one year, probably the biggest bomber, real estate need in the past might have been a 300,000 square footer, maybe even a 400,000 square footer, and you might get one of those a year. Today, I mean, you're looking at a couple million square footers a year and, a 300,000, our sweet spot building size in this market used to be, 75 to 150,000 square feet. And, I'd argue that sweet spot building size today is closer to 250 to 350. So, the market really has changed a lot in the, in the past 20 years. I can tell you that rent was relatively stable for ages. I mean, you could just, you could always quote an industrial rent in Boston because it was between 350 and 450, and it never changed. In a good year it was 450, in a bad year it was 350, but it was always right there. Well, that's clearly changed, and that's changed a lot. First slide you'll see, just kind of shows the relationship between vacancy rates and market rates, and clearly, the more, the less vacancy we have, the higher market rent is going to go. And that's not, that's not just the industrial market, that's every market. But in the industrial market here in New England, we have just seen a ton of absorption. And that, we have not caught up with the supply, although I think we are catching up. We have not caught up yet, which has driven, industrial rents to, it says they're up 35%. But if you go back, I mean, we're quoting for just a just a normal industrial building with, relatively little build out, we'd be quoting 750, 850 right now. And we're doing, rents with a little more build out, for industrial rents. I mean, we're hitting, double digits all day long. For our industrial and flex properties, I can tell you that in 2007 in Billerica industrial flex, I was quoting, $6.50, $7. Today we're quoting 12. I mean, just big differences. So, that's the past kind of coming into the future. I mean, that's what, this market was for a long time, and it's changing a lot. You can switch the slides, Chris. Look, everyone's talking about e-commerce and kind of how that's changing. And yeah, it is. It's 100% changing everything we do. It's changing our, what our shoppers do. It's changing, how we buy things. It's, this is something that everybody on this broadcast knows. There's a lot of stats here about how much is needed in the future, and I think a lot of these are estimates. And I think only time will tell how accurate they are. But the one word that keeps coming up in a lot of these stats is Amazon. Amazon is clearly driving the market, and they are clearly pushing rental rates and pushing product sizes, etc. Their appetite is insatiable, and at some point it has to stop. We just haven't seen it stop yet. You can go to the next slide. This is kind of an interesting slide, and this really has more to do with kind of COVID, and it talks about stocks in this slide, and it talks about what consumers are, which stocks consumers are, buying, etc. And I think the interesting thing here is that, look, consumers know what they're buying and where they're not going. Everybody knows that, we're not going out to dinner as much as we used to. And as a result, restaurants are suffering. And everybody also knows that, they're buying everything, their groceries and their, and all their, household items. We all know that we're buying those online. And I think that, as a result, you can see kind of where the winners and losers in COVID-19 are shaking out. Personally, I don't believe, at least I hope not, I hope we're going to be all going back out to dinner at some point. I've got a lot of favorite restaurants that I'm really hoping, are not going to go under. I'm really a big proponent of that. And I'm hoping at some point that, obviously all this will turn around. But we need to change, we need to change what we're doing in order to meet this challenge. Right now, our company is seeing just a ton of demand from e-commerce users. And along with that, with COVID-19, we're also seeing demand coming from places that we didn't think they would be coming from. What I mean is we have a company that makes extruded, expanded foam, and the demand. I always thought it was a sleepy business, and I thought it was kind of a, I didn't think it was a long-term business. Sorry if they're watching, and their demand has gone through the roof for takeout containers. How long is that going to last? I don't know, but their business has tripled in the past 6 months. Interestingly, we've got a lot of users, manufacturers that have taken just, so much more space that we never anticipated them to take. Why did they do that? Mostly supply chain disruptions. They're worried, that they can't get their product out of, China or Malaysia or Vietnam or wherever it's coming from. And so they're ordering a lot more product so that they can manufacture whatever it is they manufacture. And again, these are groups, these are semiconductor groups, these are furniture manufacturers, these are multiple different types of manufacturers, anywhere from high tech to low tech. You can go to the next slide. Everybody knows that, a lot of this last mile stuff is being developed. We're all seeing it. Again, Amazon, you see the vans everywhere. Not only Amazon, but FedEx is having one of their best years ever. UPS is having a banner year, and they're delivering for groups. Look, there's Amazon isn't the only game out there. I mean, there's all sorts of other big direct-to-consumer home delivery type companies, right? There's there's Chewy, there's LL Bean. I mean, there's just lots of these different companies out there, and as a result, we need to get closer to the consumer, and that's driving a lot of growth closer in, call it 128 area, et cetera. There's no vacancy whatsoever, and groups are making do with kind of whatever they can find. They're not getting their ideal real estate; they're just taking whatever they can get. You can go to the next slide. Where's this opportunity? Where do we think opportunity is? We think a lot of the opportunity here is, look, a lot of industrial properties that are closer to the cities have been, repurposed, whether it's, creative office or some type of knockdown, and where, it's being, developed into something else. A lot of these properties are older, they're functionally obsolete, they need a lot of work. I look at a group that up in Lawrence, they just raised the roof on a older industrial building up there. That worked out very well for them. So, roof raising, knocking down, repurposing. A lot of our larger boxes are moving, further west, north and south. Metro West and even Central Mass has seen just a lot of growth that was not there for a long time. So we're seeing, opportunities like that. In addition for us, and I'll let Phil DeSimone is going to talk about suburban office. We're seeing opportunity. We recently purchased a suburban office building, and we're in the process of knocking it down right now. We're developing 120,000 square feet of industrial space closer in. So, there's a lot of opportunities out there that we're seeing. And again, if you have any questions about this, please feel free to ask me during the question and answer period. That's it for my portion of the presentation. Again, if there's anything that you feel I didn't cover, please ask me at the end.
Sorry about that.
Yeah.
Thank you, Bill. Next up is Roberta of the WBDC. Roberta, on to you. Thank you.
Okay, thanks. Thanks very much. Thanks to Middlesex Savings Bank. Nice job, Bill. So I'm going to focus on Worcester's downtown. In 2011, WBDC did a strategic plan which followed the opening of the Hanover Theater in 2008 and unfortunate recession in 2008 as well. And we as an organization noticed the downtown needed some help, needed some density to support the organizations that were there, Mechanics Hall, DCU, and then the Hanover Theater. So we invested at that time in a master plan, and then subsequently in 20 Franklin Street, where we brought Quinsignment Community College downtown and a significant portion of its student body in order to create density, which is exactly what we thought any downtown needs in order to survive and have a variety of uses downtown. So we like to think that that may have been a small motivator, and certainly something that gave other investors some comfort in taking some risk. And from about 2011 to 2013, with the help of the city investing in infrastructure, investing in its own properties, in particular the Common, we really started a wave of momentum downtown that took us, right up to the end of 2019. Unfortunately, as one of the most densest neighborhoods, the downtown has experienced the highest growth and then also the greatest impact from COVID. Over 20 businesses, large and small, and by that I mean, the AC Marriott, the 110 Grill, Fuel, the Brew, opened between 2016 and 2019, creating a huge impact on downtown and really changing the face and also the character of downtown, and really bringing in new people to downtown, which created an interest in the office space that was available, as well as the housing that was going in, because it had this now more regional and even national brand that was coming downtown. So with the unfortunate pandemic, work from home guidance has really depleted the downtown of disposable income, parking revenues for private and public parking facilities, restaurant orders, and cultural gatherings that are still in Worcester, only able to operate at a very small scale. And the office vacancy that was about 12% at the end of 2019 is now 20%, according to CoStar, midway through 2020. Okay, Chris. So at the height, as I mentioned, we had about 200,000 visitors annually just for the Hanover Theater alone coming to the downtown. And my presentation will focus just on the central business district. I know downtown is described in a number of ways, but this is really just focused on the central business district, which is really Main Street and down behind the Common. In 2019, we had about 50,000 people coming into the city on a daily basis to work, for court business, for city hall business. About half of those came in on a daily basis because they had an office downtown. Okay, Chris. So with the change, really the first quarter of 2020 and the stay-at-home guidance that was received, there's been a decline, certainly in office rentals, and the vacancy has increased. And currently we have about 475,000 square feet vacant in the central business district. Obviously not all of that is a result of COVID. Some office space is in the middle of renovation. Some was already vacant prior to, but certainly this creates opportunity for some and certainly choice for others in the type of office space that can be leased up today. Okay, Chris. So just as a visual of what that looks like, that certainly is quite a change. We have about 2.8 million square feet in the central business district. As I mentioned, we're looking at but just about a 20% vacancy rate today. Okay, Chris. So we certainly have those that have sort of shuttered because they needed to, and some because they're just waiting out the storm. The DCU, the Palladium, Mechanics Hall, and the Hanover Theater are still under strict guidance with a cap on attendees that can gather there. And certainly with those business models, these much smaller gatherings just don't make sense financially for them to open, but they are still here. They're with us. They're fundraising, and they're keeping active virtually. Those other small businesses that opened during sort of a renaissance, Elizabeth Grady, Kraft, and the Protein House are still here. They are, we hope, waiting it out, waiting for a little bit of normalcy to return. Armsby Abbey, longstanding great restaurant business in our downtown, has announced it will stay closed until March. We hope that March comes quickly for a number of reasons, and we see them open again. Okay, Chris. And those that have stayed open and actually, done quite well and even expanded, like Crust, is still here. Sweet Jane's, favorite retailer of mine downtown. I think I have a section named for myself. in that store. She's remained open, has a great online presence. Maker to Main really recently opened right before the pandemic, and has done a great job because it fills a niche downtown that just did not exist of local fresh produce and groceries. The Owl Shop, longstanding customer base that has stayed open. Dead Horse Hill with obviously takeout. And then Strawberries Daycare, again, another new venue to downtown, a new business of daycare that, again, filling a huge need for those that are returning to work, that must return to work, whether you're a healthcare worker or frontline worker in some other capacity. Brand new daycare on Main Street that has stayed open. Okay, Chris. So the impact, I just chose two institutions that that obviously have a huge impact on visitors as well as employment downtown, and as if they are managing that. So the DC Center, I had mentioned, Hanover brings about 200,000 visitors in annually. The DCU Center brings in slightly more than that, a little over 200,000. A number of events, since in 3.5 months, they lost 86 events at the DCU Center and almost 200,000 people in that quarter alone. Revenues are down. Net losses are piling up. Where there were profits, there are losses now. No part-time work for both of these organizations. Furloughs were required in order to survive and be prepared to open the doors when this does end. The Hanover has done a fabulous job and has a great support base that allowed it to fundraise to stay open, as well as the CARES Act and the PPP that was able to be secured. So we'll wait and see more than that, but the impact to the downtown is almost 400,000 people in 2020 that won't visit, spend money, eat at restaurants, go to stores, park in parking garages and parking lots. So this has been a significant impact to our downtown. Okay, Chris. So moving forward, the sort of bright lights and really, what will prepare us for the recovery. And I would say the city of Worcester has been the steady hand at the wheel in this and has continued its projects, its infrastructure projects, as well as its building projects. So you'll see in the pictures on the top left that the city is completing its Main Street reconstruction and sidewalk project. And that will be a huge impact. We will be ready to open the doors of those restaurants and those retailers that have sat quietly and waited for this and look so much better when we do open. The Hanover Theater continues its plaza with the assistance and financial assistance from the city and some in-kind work. And the Pearl Elm Garage has been underway throughout this entire year and will open to newer, cleaner, safer space in that garage that serves so many downtown businesses. The city has also invested in the YWCA through its CDBG funds and its home funds, and it's continuing its work on the public main branch of the public library. In addition, the city is supporting residential development downtown, which with all of us working from home, it's almost like recreating the office landscape, in your apartment or in your condo. So people now working from home that live in Worcester can continue to go out and support businesses downtown. And the city is supporting the conversion of the courthouse through Trinity's efforts into apartments, as well as 340 Main Street. And it also supported 332 immediately next door, which did bring in, again, 50 units of new housing and stabilized the Main Street portion of downtown. Okay. So just an update on WBDC as well. I said I would speak briefly on the life science ecosystem, though I'm sure there are others on the panel that have just as much information. WBDC has been in the mix recently with its purchase of 46 acres from the Commonwealth up on Belmont Street. And we've seen great success. And I think Bill has touched upon this, and Phil probably will as well, as to whether or not this market, is going to continue. When this land was purchased and a task force was created around what type of use would be best for Worcester, life science came right to the top of the decision-making pile, in particular because of our educational system, the number of students, the number of life science degrees that come out of Worcester. We actually in central Massachusetts have a higher number of life science degrees that come out of our educational system than we do nationwide. So that educational force, as well as the ecosystem that already existed with UMass's Life Science Park, with MBI, with Gateway Park, really did fill a very important niche. Our competition right now is Cambridge, but we certainly have the ability to build on land that Cambridge just doesn't have right now, as well as provide an affordable alternative, both for transportation as well as lifestyle. And we're seeing biomanufacturing in particular sort of come back from where they were globally in other countries to come back and begin to reinvest in their manufacturing back in the United States. So we have determined, not just anecdotally, but certainly with two recent sales, that this area, this Central Mass region, does fit the needs of these biomanufacturers, and the fact that the land is in our control, that the city is investing again in infrastructure, creates pad-ready sites that helps companies turn around their development sooner rather than later. So just some brief statistics on where the entire market is going, not just biomanufacturing, but R&D buildings within the city are just about at 100% occupancy. MBI has been at 100% occupancy for the last 3 years, which created a need and a demand for them to expand, which they did, and they're exceeding their expectations of filling that space well in advance of their projections. Okay, Chris. So just some photos of our recent success at the park. The top photos are a virtual groundbreaking that we had with Wuxi Biologics for their 107,000 square foot facility located right on Belmont Street. We had a June groundbreaking, and they've begun site work. And then Galaxy Life Sciences was the most recent, purchasing land within the park for a 95,000 multi-tenanted spec building. And they will begin permitting through the city this quarter, and then site work next year. So I think between the downtown and the preparations that have begun there, in the continued investment, as well as this market of life sciences, I think the city is well poised to come out of this pandemic just as strong and really ready to take advantage of folks coming back. And as Bill says, ready to eat out at restaurants again, and the city's going to look great and open its arms again. So thank you.
Thank you, Roberta. Up next is Phil DeSimone at Kelleher and Sadowski. On to you, Phil.
Grant, thank you. And thank you for allowing me to be here. I appreciate it. I guess I drew the short straw. I have to talk about the office market after listening to the healthy industrial and life science markets. But no, only kidding. I think it's not as bad as you may think. And in fact, I think in the long run, the suburbs will benefit and fare better than Boston. And by the way, when I talk about the suburbs, what I mean is there's Boston and everything else. So I'm talking about suburban Boston, Central Mass, and Worcester. I lump those all together, okay? Sort of in the short term, what are we seeing? I think we're seeing a major reaction to the pandemic, but I sort of see it as a knee-jerk reaction to it. And so what I mean by that is, A lot of companies' profits may be down. They're seeing very low utilization rates of their space. So what are they doing? They're putting space on the sublease market. So we're seeing a lot of that. In Boston, in particular, those are the highest rates of subleases being put on the market. And I think there's a few reasons for that. One is the reliance on public transportation. So not many people want to use public transportation. And I think that's going to take a while before people get back to that. There's very high density, right, in Boston. And so people are fearful. They don't want to be in crowds. And lastly, I think large companies in Boston lease space. And so it's easy for them to sort of say, okay, let's put some of the space on the sublease market. Whereas in the suburbs, right, many companies, especially some of the larger ones, they own their facilities. So they're not necessarily going to share their space with anyone. So we see this, less utilization, but we're not seeing the sublease we see in Boston. Also, I think the suburbs, and again, I'm saying it's suburban Boston, Metro West, it's Worcester. There's less density, right? We're seeing the suburbs are now in again, right? And I think we're seeing that in the housing market too. People leaving Boston to go out to the suburbs. They can drive to work. It's easy to park. They're sort of close to home. So today, in the short run, we're not seeing a lot of transactions, right? We're seeing some sort of short-term renewals, people sort of kicking the can down the road, but there's no real stats to say where are rents today because there's not many transactions. So what I want to do today is sort of focus on what is the long-term impact on the office market. And I think there's two main drivers. One is how are companies going to utilize space and how much space do they need? So what I want to do is, if you go to the next slide, I want to talk about what were the trends a year ago, what's happening today, and what are we looking at a year from now. So I sort of picked 5 things. So let's talk about location. What properties were doing well a year ago? And those were the properties that have that live, work, play kind of feel, urban feel, a lot of things around, everything was happening right around, where people work. I think 2 really good examples of that is Apex Center out in Marlboro, right? That office building was doing extremely well because there's entertainment, there's restaurants, there's residential nearby. Here in downtown Worcester, Mercantile Center, same thing. Chip Norton spent a lot of money on this building, creating, vibrancy, creating retail, great common areas. And so those are the buildings and those are the properties that were doing really well. The workplace, what did the workplace look like? And really the focus was on collaborative spaces, team rooms, conference rooms, cafes, those kind of spaces where people could collaborate and be together. And there was less focus on, someone's workstation, okay? In many cases, there was a lot of benching going on. So high-tech companies, in general, about 175 square feet per person a year ago. Space utilization, any given day, except for say Friday, because I don't think anyone works Fridays anymore, was about 75 to 80%. So any space, there was about 80% of the people were there on any given day. And work from home policy was minimal, 10 to 15%. And in fact, pre-COVID, I was seeing studies that say that many companies want the people to go back to the office, right? It was less productive. There was, the culture was eroding. There were certain things that were happening. They felt like they needed to be back in the office. So let's go to the next slide. So what's today, right? What's the best location? Home, right? That's the place where everyone is, people feel safe. And in fact, I think in the last 6 months, most people have a pretty good workspace at their house, right? They didn't have that before. So working from home works. What does the workplace look like today? No one really knows because they're just trying to figure out how to get back into the office, never mind what it's going to look like in the future. Square foot per person, don't really know. Is it going to be greater, smaller? What's it going to look like? No one knows quite yet. They're trying to figure it out. Space utilization. So if you ask Boston Properties right now, they're one of the largest real estate owners in Boston and the suburbs. About 15–20% of all employees are in the properties that they have, even if they're 100% leased. That's not a lot, and especially in Boston, it's probably more like 10%. So work from home policy, everyone's saying stay home, it's okay. We want you to be safe, we want you to feel good about it. Many people are there because of health issues, school, all sorts of issues while they're staying home. So that's where we are today. Let's go to the next slide. So where do I see it going a year from now? And let's assume we have a vaccine and we're close to it, right? I see locations that are going to work well is going to be this hybrid model. A really good example of that is there was a company in Boston recently that their lease was expiring and they had to move. They had 40,000 square feet. They took 10,000 in Burlington, kept 10,000 in Boston, and 10,000 in Braintree, right along the red line. So they satisfied all of their employees. Some that wanted to stay in the suburbs, some that liked the Boston feel, but they went down by 10,000 square feet. But the net gain to the suburbs was 20,000 square feet. So we're going to see a lot of this sort of hybrid model, I think, and we're going to see a lot of shifting around. We're going to see companies that have space, say, all around Massachusetts, say Boston to say Worcester, and they may pull out of Boston and add more people to their Worcester office. I really believe that that's sort of what's going to happen. What's the workplace going to look like? It's, we're going to be more separated, right? We're not going to be on top of each other. It's all about wealth, health, and wellness, and being safe and all that. Square foot per person, I'm reading a lot about that, and it's more like 225 to 250 square feet per person, more offices, wider quarters, not benching. So that's going to increase. Space utilization and sort of work from home policy go hand in hand. So what we're going to see is we're going to see about 50% of the time people would be in the office, okay? And then they're going to work remote or from home 50% of the time. I was down in New York City visiting my daughter last weekend. I asked her roommate, I said, how do you like working from the apartment? She said, I really like it, but what I would really like is 2 or 3 days in the office and maybe 2 or 3 days at home, because I get a lot done at home. It's very flexible. I'm probably more productive, but I know I need to go in the office for team meetings, for company-wide meetings, and get sort of all that work done and then go back. I think that's the wave of the future, is that sort of 50-50 sort of mix, and then the hybrid model. Why don't we go to the next slide? So what does that mean? What does it mean in the short term? We're definitely going to see more sublease space come on the market. We're going to see, and we are seeing short-term renewals. I'm working with a lot of clients right now that say, can I just do a 6-month extension, 9-month extension? I don't know where I want to be, how big I am, et cetera. There's definitely renegotiation of rents, and a lot of that has to do with the fact that companies are saying, listen, I'm using 20% of my space, and I'm paying for 100%. Going to landlords and saying, how can I sort of renegotiate that? Not necessarily saying the rents have come down, just I'm not utilizing space. How can you help? And then really it's trying to get back to normal. We're seeing more people go back to the office, and how do we actually do that? Long term. So here's my prediction. I think that tenants are going to need 75 to 80% of what their current footprint looks like. So square footage per person is going to go up, but due to that 50% occupancy or utilization rate, it's going to come down. So probably more like 80%. There's definitely going to be a focus on health and wellness and having clean space. So when you go into your office, it's going to be a place where people want to be, and not necessarily just being sort of jammed in and crowded or being totally separated. So that's going to be a big shift. Again, I think there's going to be a shift outside of Boston into the suburbs, into central Mass, and being much more spread out, very similar to what's happening in the housing market. There'll still be additional sublease space being put on the market, which frankly, what that does is it puts downward pressure on rents. But I'm a firm believer that not many companies are going to go from where they are today into sublease space, because they're in space that doesn't work that well for them due to all the factors I've just talked about. And now they're going to go into space that they can't renovate, and it's going to be look and feel just like what they had. So I think they're going to be doing more direct deals with landlords who are going to be able to satisfy that. But I still think there's a little bit of downward pressure because of this noise, I call it noise, of the sublease space. So what will landlords do? Well, I think, taxes not going down. Operating costs, I believe, are going to be going up because of all the things you have to do now. And construction costs going up. So the margins are very thin already. So yes, there's that sort of more space on the market. So maybe landlords have to give incentives. So maybe it's a little bit of free rent, but I don't see the rents dropping significantly. Maybe it's a 10% drop, but it's not going to drop like, 25%. So again, Long story short, I think it's suburbs are going to do fare better than Boston, downtown Boston, and I don't think it's going to cause major dramatic shift in rents. And I think that the landlords who can satisfy tenants on their workspace are going to do the best. That's what I have.
All right. Thanks so much, Phil. Lastly, we'll hear from Mark Donahue at Fletcher Tilton. Mark.
Thanks, Grant, and thanks for the Business Journal for putting this on, and our friends at Middlesex Savings for participating in this as a sponsor. It's always a challenge to bat cleanup after 3 smart people. Your notes get pretty much eviscerated from what everybody else has already stolen from you. So I will do my best to still put pieces together. But I think being a lawyer, which is a nice way to say a mercenary, gives one a pretty good perspective on the last 7 months of the COVID. We've been dealing with owners of real estate in all the segments from that both Bill and Phil talked about. We represent a number of tenants in that field. We represent lenders into that field and therefore borrowers. And we represent a number of clients in the hospitality industry. So we've seen just about everything that can happen in the last 7 months happen in some fashion. And it gives us a pretty good perspective, I think, on what's going on. There's no doubt that it has shaken really across the industries, people to their core as far as value. And the biggest issue we see right now is the lack of certainty as to where the future is taking us as to the arc of the COVID. But it's been said and attributed to many, from Machiavelli to Twain to Churchill, never let a good crisis go to waste. And a crisis is a good time to look internally at your own organization. What do you do best? What can you propose as a value proposition? And I think that same sense works as far as looking at the region as a whole of the value proposition of Central Massachusetts. Phil mentioned it, and it's true, and we have to remember this will end. Every crisis ends, and this one will end. We'll all get used to wearing masks for a period of time. There will be a vaccine, and there'll be some level of a new normal. So what does that mean for Central Massachusetts? You can go to the next slide, Chris. I'm fairly bullish on what the future holds for where we go. And I've got a few points to touch on there. I think one of the keys is the workforce. Roberta touched on the growth of the life science industries. And when you look at the core of what the Massachusetts economy is, and you look at financial services, educational institutions, healthcare, bioscience, and those type of things, what you need are smart people. And what the Massachusetts miracle has more than anything else are smart people. And there's a lot of smart people in Central Massachusetts who really don't want to have to go to Boston anymore on a regular basis and go into that facility. That's a great opportunity for what it is. And I think businesses are going to focus on that significantly. The biggest asset of a company isn't its space. It's not a collection of space. It's a collection of people. And smart people is what every business seems to want. And that's going to continue to grow, I think, Massachusetts. Our location in Central Massachusetts, I think, continues to be exemplary for a lot of the things that Bill talked about. The roadway network in Central Massachusetts, the access to the east-west corridor and the north-south corridor is superior for people who basically have to move goods by wheel. And we've got the benefit of a number of sites along those corridors that continue to be available for development in close proximity to that, including some sites that can take, as Bill was talking about, the new requirement of larger sites in excess of 250,000 square feet. And while distribution and warehouse and last mile facilities is out gobbling that up, I think there's also an availability for manufacturing that I'll talk about in just a moment coming back into Massachusetts. Educational institutions, everyone knows the strength of the educational institutions in Central Massachusetts. Well, I think when you look at the type of those educational institutions, and I'm thinking specifically of WPI, Quinsigamond Community College, and MCPHS, the way that they have worked adroitly to develop programs that train people essentially and get them qualified to enter into the workforce and serve valuable purposes. Much of the facility that Roberta talked about for QCC that's downtown is focused on programs specifically to give people the skills necessary to enter the medical services field. MCPHS has built any number of programs and accredited programs over the last 4 years to fill particular needs. And I think that's a benefit of being in a close proximity to those and being able to work collaboratively. Next slide, Chris. So what I call the second level city is basically the city smaller than the cities that have an NFL team, and that's what Worcester is. And the Worcester Renaissance is certainly been well documented, and it's very, very true. It's true outside of the boundaries. Roberta talked at length about what's going on specifically downtown, and that's really important in building it. And what we were seeing leading up to February was a continued interest, most particularly of out-of-town money and out-of-state money coming to invest in Worcester. And those are that portends for great things to continue to happen. The echo of that goes far beyond the boundaries of Worcester. Specifically, there are companies that have located east of Worcester in Westboro and Shrewsbury that as part of their relocation of their workforces specifically cited to the proximity of Worcester and its ability to serve as a city for an ability to have other services is one of the reasons they did it. Roberta touched on specifically the unique positioning for life science and medical. This is going to be, I think, the sweet spot for Central Massachusetts in the next 36 months. I think there's going to be a significant investment of governmental dollars into life sciences, biomanufacturing, and medical efforts, which is going to create capital that needs to do it. And the ability to plug and play into an existing ecosystem that runs from a teaching hospital to a medical school, to an incubator space, to a research facility, to biomanufacturing, all currently within 1 mile of each other, I think is simply something that's not necessarily repeatable, particularly at the cost of entry that's going to be involved there. And I see it as a strong selling point. Worcester and Worcester County and Metro West continue to be affordable in comparison and continue to have a number of good sites available for development that are pad ready. Roberta referred to the Reactory, which is pad ready. Madison Properties is developing the property in and around Polar Park. It now has pad ready sites that are capable for anything from office space, single user office space, multi-office space, lab space, all of it fully permitted, ready to go for users. And the ability to get to market fast is going to be a factor for any number of businesses. Next slide. Having said that, they don't call it a crisis because it's cute. It is a serious issue. And it also focuses, pardon me, I think, on the issues that we face as a region across the board in continuing the growth. For the immediate Worcester area, I think the proverbial death of downtown is an existential threat. The region, in my estimation, cannot work as a commercial donut with businesses surrounding an essentially dead downtown. The momentum that Roberta talked about that was building, which was real coming into 2020, has certainly slowed down. And there's a real concern that it was young and fragile, and that unless there is a turnaround in a relatively near future, that capital will seek other places to go for all the reasons that Roberta talked about. So I think the region needs the restaurants in Worcester to survive. It needs the entertainment venues to reopen. It needs people to stay in the hotels. It needs people to still want to live in the downtown area, to take advantage of a 16-hour community in that area to be able to do it. And it needs the cultural institutions to be able to stay on board also. That is a serious threat depending on how long this continues to drag on. Much of the development that particularly Roberta talked about, but which exists elsewhere, involves at some level involvement of government dollars. There is no public money invested in the construction of Polar Park, but it is true that there are significant government dollars in the infrastructure in and around Polar Park the Canal District, and Kelly Square. And those are the examples, and those happen in Shrewsbury. It happens in every community where government comes in and is able to close a gap in some fashion and be able to do that. And I mentioned earlier, investment in things such as life sciences and medical. But there's going to be other pressing needs of government as government deals with both a revenue shortfall, increasing debt, and other needs that people demand. And in moving forward in that fashion, whether economic development continues to be a focus of government is a significant concern. It's been said that the biggest threat to the continued growth of the Massachusetts economy is the cost of housing and the lack of it. That was said by Governor Baker in his 2000 State of the State address. It's continued to be a problem. In the last 12 months, 7 of which have been during a pandemic, housing costs have risen by 15% in Worcester County. It's simply not sustainable. Employers can't pay people a premium to live in Massachusetts so that they can afford a house in Massachusetts. And people can't leverage their future in order to have someplace to live. And the efforts that are going on to grow housing are focused mostly on multifamily development, which will have a niche certainly, but is not going to be the only answer to be able to deal with the need for housing going forward. The real threat, I think, going forward, in summary, is that the last 7 months is followed by the next 17 months. If this work from home, which I refer to more as sleep at work, becomes the new norm, people end up bunkering in. All of those things of failures will simply happen. The ability to hold on and wait will wear out, and other factors will happen and hit the economy. Having said that, I have every reason to believe that the region is well poised for a recovery from this pandemic and actually stands in a better position than many moving forward. Thanks. And thanks for the reason to wear a tie.
And thank you for joining us. I appreciate the time. For listeners, we did say we'd wrap up by 10, but we've had such detailed presentations. If it's okay with people are able to stay logged on maybe for an extra 10 minutes or so, that'll give us a chance for some great questions to follow up. And I think maybe it's a good place to follow up with Mark while he still has his tie on. People might have read or heard about a lot of force majeure clauses, a term that means an act of God. It can play a role in whether a tenant challenges whether they'd have to pay their full rent, for example. Are you seeing tenants or others invoke a force majeure clause often, or is it something that is maybe already even being written into new contracts?
Well, it's certainly being written differently in new contracts. There's no doubt about that. It's often been said that nobody reads a lease until there's a problem, and a force majeure provision is probably the best example of that, which is usually somewhere between section 36 and 42 of the standard commercial lease. There was certainly a lot of thrust and parry about force majeure back in March, April, and May, particularly in the retail sector and the restaurant or hospitality industry as reasons to not pay. Most of those, our experience ended up being resolved. Landlords weren't anxious to get rid of tenants that were paying up till that date. And you can certainly see if you're not in business, it's hard to pay your rent. And frankly, didn't have anything else to do with the space anyway, so there's no real upside to getting it empty in some fashion. So you saw a lot of deferrals. Deferrals led to extension of term, because term has value in any case to a landlord. So sometimes it was some forgiveness up now, spread it out over the next couple of years and extend the lease in some fashion. There hasn't been a whole lot of litigation yet all the way into force majeure. That'll follow in a few years. It'll be coupled by a fair amount of litigation that can be expected with regard to commercial insurance policies and whether force majeure is an insured claim or not. You can assume that there'll be many lawyers who will be spending a lot of time on that.
Thanks. And I just want to go back to Bill too. you have the broadest portfolio, I think, of our speakers. I want to focus more again on retail. What do you see as the future of shopping centers, especially indoor malls? We've seen, even in the case of the Natick Mall, they've lost 2 anchor tenants, and Lord and Taylor and Neiman Marcus. They've previously filled space for Sears and for JCPenney. But what happens next? What if a lot of retailers don't make it to the other side of this? Or you mentioning Amazon, what if a lot of people develop a shopping habit of going to Amazon and they don't end up going back in the same way to shopping malls?
I think they're going to change, and I think a lot of retailers are, not going to make it. I also think many will, file and then, shed debt, shed unprofitable locations and change. So I think that, that's kind of the natural bankruptcy process there. I think that's going to happen as well. I think that people still like to go and see things and touch things and kind of, whatever, try things on or what have you. But yeah, no, things will change. Furniture shopping has changed a ton. There's some groups out there. There's a group called Marksant. They're doing this amazing, on virtual kind of, just, build your room and, do that type of thing. There's a lot of really neat applications out there. I think there's still going to be a place for retail. I just think it's going to change. I think a lot of it's going to be more experiential in nature. So, think like, maybe malls, instead of being a mecca for just shopping, it's kind of a living and, dining and, experiential type place. Look, America is graying. I think that the way we live is going to change. I think one thing that COVID did was take, maybe kind of a 15-year trend and kind of, crunch it down, right? I think we probably saw, 10 or 15 years of kind of retailers that would have naturally died anyway. I think this COVID-19 thing was kind of a death stroke for a lot of them. So I think it's going to change. I don't think it's going to go away. I think there's going to be repurposing. I think some the better malls will get kind of more residential around them, and the uses will change a little bit.
Great, thanks. And Phil, to go back to you on sort of what the future of offices and office space looks like. You mentioned collaborative workspaces in the past. Now people are largely working from home. It's expected they'd go back to the office at least part-time or at reduced capacity. Could you give us a little bit more detailed idea of like what are these future workspaces going to look like? And if companies are not often going into subleasing, what does that mean for office growth or spaces, these buildings that already exist for what were larger tenants?
That's a good question. So as I said, I think that generally over the next, couple years, and if you think about it, most deals that happen are 5-year deals. So 20% of every year there's tenants that are rolling, right? So over the next couple of years, we're going to see a lot of these leases expire, and these tenants are going to have to figure out what they're going to do with their space, right? So I do see a lot of movement going from one building to another because it's very difficult to renovate in place. So I do see movement. And what the space is going to look like, I think it's going to be space that works well for groups that come in, okay, teams that come in and have meetings and collaborate. So they're going to be larger spaces, conferences will be larger. I think break rooms potentially will be larger and maybe separated, right, a bit. To make sure that there's everyone stays healthy. Workstations will be more separated. I think we're going to continue to have those. There may be some partitions up higher. They were coming down for a while. Now they're going to go back up. Probably more offices, but I think we're going to see unassigned seating a lot. So what will happen is there'll be unassigned seating, and people will come into an office be assigned a desk or a station, but every night it's going to be cleaned. Okay, so it'll be very clean, and you'll come in and you'll work based on your team as opposed to just being in the office. And so I see that's what I mean by sort of collaborative space. It's going to be more separated, and people will go in on certain days, right? You may be Tuesday, Thursday, someone else is Monday, Wednesday, and again, as I said, no one works Fridays anyway. So I think that's what it's going to look like.
And you mentioning the subleasing makes me think of, if there's like a standalone campus, like say like Boston Scientific in Marlborough or something, that's a place that doesn't seem to make sense for subleasing. But with Roberta talking about the downtown vacancies right now, it makes me wonder whether there's an opportunity to bring in new tenants through that way, or to hear a bit more of what the WBDC is doing with the city and other partners to try to get that progress in the neighborhood back on track.
Sure. So I would first say that we just so happen to have a co-working space available for those who are tired of sleeping at home, to Mark's point, at 20 Franklin Street, which does exactly what Phil says. It's unassigned seating. You come in with a membership, and the space is cleaned, after you leave. And I think what it does, and actually, and with the unfortunate news of Unum, we reached out to Unum and said, if your employees are not set up to work at home, and they do want a professional environment where they can feel as though they, have, schedule again and access to retail and restaurants that were still open, they're certainly more than welcome, and we have space available at the Idea Lab. And I do think that is going to be a trend that was growing significantly in Boston, and there were some issues with structure in terms of some of these companies owning, entire buildings. This is a space that employees can come in for a very modest membership fee and allow that structure to be reintroduced to the employees. But what we're doing downtown is we continue to own 20 Franklin Street. We're supporting the Business Improvement District, which took effect in 2019, and it's sort of a safe and clean right now program with ambassadors downtown that continue to manage and keep clean the streets and the sidewalks, and are really beneficial to property owners. They've gotten to know, the ambassadors have gotten to know property owners and facilities people. They're keeping an eye out on properties. They're managing public spaces, and they are interacting very closely with the city, DPW, as well as the health and safety officials. So I think we're all sort of pulling together in this strange environment and finding out sort of who needs help the most, and that's from the city's homelessness population increasing and changing in the demographic of that. From the YW, who is downtown, serving that population, serving domestic violence survivors, being a resource for childcare, another childcare resource downtown for frontline workers. So I just think it's really a great time for collaboration, and something that nationally we could look at. But I think we're all pulling together and really, rooting for each other. Trying to, we're offering parking for the Theater Cafe that is having events outside to try to keep its business going. The Hanover Theater has done some outside events with WICN Jazz at Sunset, in the parking lot, like whatever it takes to keep people downtown and remembering that there's a downtown to go to. I agree with Mark. It was a fresh, fragile proposition, this people coming downtown and staying there and looking at housing and wanting condominiums and restaurants opening, almost daily at one point in time. And we need to support that infrastructure, and we need to support those that did the right investment. And I think a lot of downtown property owners really are doing that.
Sure. And I'll just stick to you, Roberta, for one more. Obviously, one bright spot here is life sciences, as you mentioned. Construction underway for WuXi Biologics and the groundbreaking the other day with the Galaxy Life Sciences building, both very significant. What will it take to sort of build beyond that? Is it to reach a critical mass where these existing, soon to be existing tenants will attract others? Are we at a point at all where we could even see space being built on spec for life sciences as some of these companies maybe look to increase their presence in the greater Boston area, or even to move from, say, a Waltham or Cambridge?
Yeah, I mean, Galaxy is doing that with their first building. They are poised to draw down another parcel for a specific tenant, but their first building is speculative. And it was designed that way, but I have a feeling that with the interest that they've received from tenants, it will be modified to the tenants' needs before it gets constructed. But I think the only impediment to keeping this going is land, available land with infrastructure that's large enough to accommodate these uses. And I think that's something that Central Mass boasts over Cambridge right now, but in Worcester itself, there's not a lot when you sort of tick down the inventory of properties of the size of the reactory, 46 acres, not all developable because of its topography. There's not a lot more of those sites that are already assembled or could easily be assembled. So I think that's our largest impediment. I think we have critical mass already with the R&D, with the medical school, with Gateway Park, and certainly with the college institutions that have these partnerships. But I think where we're going to stumble is if we can't keep ahead of the demand and keep assembling land that accommodates life sciences.
And this may be our last question, so I'll put it out to any of you. Whether you're seeing cases of landlords negotiating reductions and lease obligations, tenants having a hard time paying, and how those factors and others may affect land prices or leases down the road, and what that could mean for occupancy once we're finally through this pandemic.
I can take a crack at this. So I think from an office standpoint, it's truly case by case. There's not, one size fits all. So it depends on the landlord's, debt covenants. It depends on the basis they have in the property, whether they can restructure some leases. So it's really a hodgepodge of results there. But I think most of the landlords that we're talking to are trying to accommodate their tenants in the short term. They really are trying to say, all right, let's restructure something over the 6-9 months because we totally understand what we're all going through. So I think it's going to sort of help the market. If you can keep tenants in place and reduce their rent now, they're more likely to stay than to then eventually work from home, right? So because we are seeing some tenants saying, I can't afford what I have, and if the landlord doesn't help me, resolve that, I may work from home permanently and then come back at some point, right? And that could take a while. Maybe they feel more comfortable doing that. So the more they can keep people in office buildings, I think then once this thing subsides and it's over, they're going to start to come back into the office.
And just to quickly add it to that, Bill, are you seeing that in retail at all? Do you know whether there's been so many bankruptcy filings in retail? I mentioned a few of the big ones, the anchor stores at Natick Mall, but even for smaller ones, are there retailers who are just trying to kind of get through this and need a break on their leases in the meantime? Are they having many of those discussions? Do you know?
Yeah, so we have most of our retail exposure is through the distribution channels that retailers use. Although my nephew works in retail, for a retail developer, and I think I think you can point to kind of some interesting things out there. Recently, the Paper Store declared bankruptcy. They're a local retailer. I don't know how many units they have, 90 units, a couple of distribution locations. I know that WS Development actually gave them a cash infusion. I guess they had a close relationship and, was kind of bringing them back. I think that, a lot of the larger retailers aren't necessarily going to go away. I think they're just going to change, right? When you file, and again, I'm assuming reorganization, not, liquidation, but when you file, it gives you the opportunity to reject unprofitable locations, basically wipe out all your stockholders, replace your stockholders with your debt holders, or vice versa. So yeah, I think there's a lot of opportunities out there. Look, I think if we're talking, kind of micro retailers, like really super small folks, and maybe 1 or 2 locations, or a few locations, that's a different story altogether. And besides the original stimulus money, I don't know what kind of options those folks have. But, clearly they are, trying to do the best they can to, restate their lease obligations. For us, we see it, which is kind of crazy, is we have these distributors that are distributing to the retailers, and some of the retailers just aren't taking the stock. So it's kind of like the hip bone's connected to the leg bone, right? It just keeps going up the ladder.
Great, thank you, and thanks to our panelists, Roberta, Phil, Mark, Bill, for being part of this webcast. Special thanks again to Middlesex Savings Bank for being the sponsor of today's webcast. As I mentioned earlier, everyone will receive a link to the webcast recording. And thanks again for joining us. Happy Friday, everyone. Have a good weekend.
Thank you. Thank you for having me.